market largely traded flat during Friday's trading session, with the S&P down 0.07%, closing at 5659.91. The largest game exposure concentration remains at the 6,000 strike. We've been highlighting this big gamma exposure at 6,000 for the last 2 to 3 weeks now. And the last 7 trading sessions has seen a consolidation range forming. In our opinion, this is a healthy change of pace after the huge run-up we've seen since April 7th. This consolidation period, even if we see a bit of a pullback back down to the 55 or 5600 level, this would all be within the realm of a healthy market activity. Ultimately, though, we expect this to resolve higher up to the 5800 strike initially, followed by the 6000 strike potentially later in the year. We remain above the 50 period EMA, which is sitting at 5587. This is on the daily candlestick chart, which we've got shown here. We are sitting above major resistance levels on multiple time frames, multiple trend lines, and so bullish momentum has remained in effect over the last couple of weeks. In terms of our own portfolio, we've been trading largely positive bias strategies, which we'll highlight a few of those here later in the video, but mostly long bias strategies with hedges in place. We broke into positive gamma exposure territory on the S&P here at the end of April and have remained in positive gamma exposure territory ever since. Going back to the highs in February, up until this breakout, we were in negative gamma exposure territory. So this gamma flip here has been hugely important. We've been monitoring this data closely, but the structure in the options market remains positively skewed. So as long as this structure remains in place, we are going to continue with bullish positions to the upside and hedging our exposure to the downside. This has worked well for us over the last year to year and a half, and we're going to continue executing on this strategy in our portfolios, which, by the way, you can follow along in real time and see all the trades that we're making in our own portfolios. So if you guys are interested in becoming a member, I'll put links in the description below. You can check that out when you get a chance. Next, let's take a look at the Qs. The Qs similarly down 0.07% on Friday, closing at 487.97. We've been tracking 2 major levels on the Qs. One is the 480 strike and the other is the 500 strike. This 480 level has been an important support and resistance really going back to 2024. We've been hovering around this level over the past week. Interestingly enough, if we zoom in here on our chart, we can see that the skew on the Qs has actually shifted higher yet again. We now see the 490 strike and the 500 strike, the 2 largest gamma exposure concentrations. We've tagged the 490 level 3 times now over the past week and a half. So this level is becoming more and more important. A breakout above the 490 strike, and the next target is going to be this big 500 gamma exposure concentration. The market continues to climb a wall of worry, and this consolidation both on the S&P and the Qs over the last several trading sessions is not showing any signs of a big break to the downside. Next, let's take a look at the volatility index. The VIX closing at 2190 on Friday's trading session. The VIX has been in a steady downtrend. Vol sellers have been just crushing the VIX basically ever since the market low / volatility high that we saw back here on April 7th. The gamma exposure at the 20 strike has been growing steadily throughout this period. And of course, this trend to the downside has been pointing that direction all along the way. Next, let's take a look at a few individual names that we've been trading. First, we'll start off with Tesla. Tesla closing at 298.26 on Friday, up 4.72%. We've been tracking this big gamma exposure at the 300 strike, and we actually got that tag during Friday's trading session. The move over the last few weeks from 250 to 300 has been pretty steady, giving us multiple opportunities to play for this 300 strike. Back on May 1st, we actually initiated a wheel strategy on Tesla by selling 5 of the May 16th 285 puts for $15.25. Obviously targeting the big gamma exposure at the 300 strike. Fast forwarding to May 9th, we actually closed those out. So just this past Friday, we locked in $4,925 in profits on those short puts. We were looking to either get assigned the position and sell calls against it or just lock in the premium from those short puts. So with the big move up to 300 on Friday, we opted to go ahead and collect some really nice profits on that position. In terms of our next steps on Tesla, basically what we're aiming to do here, since we've already come into this big GEX concentration, we're looking for a slight consolidation or pullback, perhaps into the 50-day EMA, which is sitting at 278.67. If we see a pullback into those levels, we'll most likely opt to resell puts into the June expiration. Again, this is initiating a will strategy. We're either going to collect the premium outright on those puts or get assigned the shares and sell calls against it. The gamma exposure at the 300 strike looks like it's going to remain strong for the coming couple of weeks, and we also see gamma exposure growing at some of these higher strikes as well. So we've got our eye on that for a potential consolidation, or if we get a little bit of a dip, this would be a nice re-entry before the next leg higher. Next, let's take a look at Meta. Meta down on Friday 0.92%, closed it at 592.49, but it did tag this big gamma exposure at the 600 strike on Friday, and it's actually tagged that 600 strike 5 out of the last 6 trading sessions. So 600 is clearly a big level for Meta. Meta is a position that we've been trading around for the last several months. We actually locked in $700 in profits on our May 16th 580-600 call debit spread. We were targeting this big gamma exposure at the 600 strike. So when it initially hit it about a week ago, we locked in those profits. But the setup on Meta actually looks very similar as what we were just looking at on Tesla. So going forward, we're looking for the same kind of either consolidation or a pullback around the 50-day EMA. 50-day EMA on Meta is sitting at 578.40. So a little bit of a dip or further consolidation, and we would like to re-enter for a move back up into that 600 level and even beyond. We're starting to see gamma exposure growing at the 650 strike and the 700 strike. Next, let's take a look at Nvidia. Nvidia down on Friday 0.61%, closing at 116.65. The 120 strike remains the largest gamma exposure concentration, and it's also the largest volume in the options market as well. That's been the case going back now for the last week or two. We're slowly making our way up into those levels. This is a name that's been on our watch list for the last couple of weeks. We have not yet gotten the pullback that we're looking for to enter in. We were looking for a move below the 110 strike in order to enter into a position targeting this 115 to 120 range. However, interestingly, we're starting to see gamma exposure growing at the 130 strike and even above. So this is something we've had our eye on. We may not get the pullback below 110 that we were looking for. However, if we get any kind of consolidation in this 110 to 120 range, playing the 120 to 130 range actually is starting to make a little bit of sense as we're seeing gamma exposure growing and volume coming in at these higher strikes as well. So there's a number of different strategies you can implement in order to take advantage of potential moves into these major gamma exposure levels. For example, on Nvidia, we would be looking at a very simple strategy, perhaps the 120-130 call debit spread, either at the end of May, so like the May 30th expiration, or potentially even out to the June 20th expiration. This is a very simple way to take advantage of the trend that is currently occurring in Nvidia, as well as the gamma exposure that's building at these higher strikes. These are the type of setups we love to incorporate GEX-based strategies on, and so sometimes we'll use very simple strategies like this call debit spread we're talking about, and sometimes we'll employ more complex strategies designed to generate weekly income. And guys, you can see all the moves we're making in each of our portfolios by heading over to geeksoffinance.com. You can sign up and become a member. We're currently running a special promotion, $300 off our yearly portfolio manager tier subscription. Use code May2025 at checkout. We've got a few spots remaining, so definitely take advantage of that while you can. Members get access to our gamma exposure dashboard, our algorithmic trading strategies, as well as our vibrant community Discord. You'll get access to all the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and strategies as well. It's an awesome resource. I definitely encourage you guys to check that out when you get a chance. I'll put a link in the description below. Thanks so much everybody for watching, and we'll see you guys in the next video.